Markets are unwinding the bounce from yesterday, kind of like we talked about in yesterday's video. And why is that? What's going on with markets? Well, a lot of volatility still, but the big thing was the move over in with the ECB coming in to bail out the banks in the UK, kind of gave people a little bit of false hope that potentially the Fed would pivot off of the back of that, and that we would be facing the same thing in the United States. But as the Fed members continue to reinforce there is no bailout coming, rates are going to continue to go up, and they're going to fight to get inflation down. And one of the things that reinforces that narrative is the jobless claims hit a 5-month low despite the Fed's effort to slow the labor market. So the Fed still has its work cut out for it. What it's done so far has not affected the labor market, and the Fed wants to see the labor market tighten as well as financial conditions. So that's what we were up against. The other thing is that I talked about in yesterday's video was Apple kind of propping up NASDAQ. So Apple is starting its decline to kind of catch up with other stocks, which is going to put pressure on the NASDAQ. So let's take a look at what's going on here. And we'll start with the major averages here. This is the Dow Jones coming back, obviously below the June lows. So the bottom in June was definitely not the bottom. And testing this recent low that we put in here. Same thing with NASDAQ. NASDAQ is now broken below the low of yesterday or the last couple of days, but still not below the June, what was that, June 16th low. And the S&P did break below the June 16th low. It is still below it right now. So it looks like the S&P is on track to close below June 16. NASDAQ is the laggard, and largely because of Apple. So let's take a look at Apple real quick. And we'll see what's going on with Apple. Apple has been a defensive stock. A lot of capital has been flying into the safety play of Apple. So Apple is starting its decline right now, working back towards its June lows, but it's got a long way to go. That's $129 on Apple that it would need to get to. And of course, this would represent a huge move in the NASDAQ. So Apple is about 9% off of that June low. So we'll have to wait and see if it hits that, breaks it. And then, of course, a lot of stocks are targeting that pre-pandemic high, which was still an inflated QE-driven zero interest rate policy high, or low interest rate policy, but effective rates of zero. So a lot of this continuing to unwind here. Let's take a look at the dollar is rejecting a little bit today, but we've seen this before as it kind of continues its march toward $120, which was the high set back in 2001 and 2002. So will it get there? We don't know. We'll just have to wait and see. Oil, same thing on oil. Right now, oil is bouncing a little bit, but still been on a decline. Some analysts are calling for $120 barrel oil again as we get into the fall and winter, and with the supply shock from Russia cutting off supplies and OPEC. Obviously, they're going to reduce production if the oil prices do not start to bounce a little bit. And then the other things that we like to watch is the VIX, right? So the VIX has been on the rise, but nowhere near where that March 2020 VIX was right here, but getting close to the June level. Here's your June VIX level right here. So VIX almost reaching, well, I guess it did reach out to that level, rejected yesterday. Now it's marching back up again. And then, of course, the big news that everybody has been watching is the bond market. And the reason is bond rates have been through the roof. Briefly hit 4%, rejected yesterday, trying for a little recovery today on the 10-year. Let's take a look at the other bond markets out there, the 2-year. And let's see what the 2-year is doing. 2-year is still above 4%. So this is putting a lot of pressure on risk assets, right? Because this is a risk-free yield in the 4 to 4.5% range on bonds. And that is one of the reasons why the markets are struggling to catch up. Let's take a look at Bitcoin here on the daily. And obviously, these are the trend lines that I've been watching. The major trend line here that Bitcoin has to kind of get above to look for any kind of continuation. Of course, the 2017 high price still cannot get above that and find support. Coming to this little intersection here, does that mean anything? Doesn't necessarily have to mean anything. Price can continue to kind of bounce along this line for a while if it can hold. But obviously, there's a lot of technical confluence looking for that next level down into the 15.5, 16,000 range. And if that does not hold, then breaking back down to that $14,000 level, $10,000 to $14,000 level that a lot of people are targeting. So the question is, will that happen? Obviously, the narratives in the space that if everybody is expecting it and calling for it, it won't happen. Well, that's not always how that works. Oftentimes, if you're expecting or calling for something, it can end up being a lot worse and a lot longer than you think. And that's the thing about this is that, a lot of people in the space, a lot of analysts, a lot of investors, even big hedge fund managers, Wall Street analysts have never been through anything like we're experiencing right now. Obviously, nobody has, but even this, if you go back to 2009, like we've been looking at in the past, let's just take a look at the S&P. If you go back to 2009 timeframe, what a real bear market looks like, and then prior to that, the 2001 timeframe. I mean, these things take years to play out and years to recover. And most of the people out there on YouTube, Twitter, a lot of hedge fund managers, a lot of investment fund managers, and some economists have never experienced anything like that, been through anything like that. And what happens oftentimes is that markets can go a lot lower a lot longer than you think, and they can go a lot higher a lot longer than you think. So the name of the game is patience and preservation of capital right now when we're in a risk off environment. And once the Fed does pull back, and a pivot could be the Fed stopping, right? So as long as the Fed's not raising rates and inflation is coming down, that could be somewhat of a pivot. They don't necessarily have to completely reverse course. They're saying they're not going to, but that's the environment we're in right now. These are the things I'm looking at. I'll see you in the next video.